Did you know most Americans miss out on hundreds or even thousands in tax deductions every year? We're so used to paying taxes we just hand over our money, often leaving a big tip for the IRS. The tax code is complicated, but you don't need to be a CPA to save money. It's about knowing the most overlooked deductions, the easy wins most people miss. That's why I'm making this video, to walk you through the 10 most overlooked tax deductions that could save you serious cash. By the end, you'll have a checklist to keep more of your hard-earned money. Let's get started. When it comes to tax deductions, every little bit counts. Understanding the nuances of what you can and can't deduct can significantly impact your tax bill. First up, the state sales tax deduction. You can deduct either your state income taxes, this includes income taxes you paid throughout the year, or with your state tax return. Or, you can deduct your state sales taxes, whichever is higher. It's crucial to take the time to calculate both to see which one gives you a bigger tax break. This simple step could save you a significant amount of money. If you live in a state with no income tax, this deduction becomes even more important. Take Texas, for example. Residents don't pay state income tax, so they rely on other deductions to lower their federal tax liability. Or Florida, another state with no income tax. In these states, the sales tax deduction is a must. It's often the only way to deduct state taxes on your federal return. Even if you have state income tax, don't automatically assume it's the better deduction. Big purchases like a car can significantly increase your sales tax liability, or major appliances like a new refrigerator or washing machine can also add up quickly. These kinds of purchases can make the sales tax deduction more valuable than your income tax deduction. The IRS provides a standard deduction table to help you estimate your sales tax, but you can add sales tax from major purchases on top of that standard deduction. This is where keeping good records really pays off. Compare your total state income tax paid to your sales tax deduction, and remember to include those big-ticket items in your sales tax calculation. Whichever is higher, claim that one on your tax return. It's all about maximizing your deductions to minimize your tax burden. Keep receipts for major purchases throughout the year, and use the IRS calculator on their website to help you determine the most accurate deduction. This simple comparison could put hundreds back in your pocket, giving you more financial flexibility. Don't skip it. Always run the numbers for both the state income tax and the sales tax deduction. Details matter, and paying attention to these details can make a big difference in your tax outcome. Donating cash to your favorite charity is a wonderful act of kindness, and it's also deductible, offering a financial benefit alongside the good you're doing. It's a win-win situation. But did you know that your out-of-pocket expenses for volunteering your time and energy to a cause you care about can also count towards a tax deduction? Many people overlook this valuable opportunity to maximize their tax benefits. Think about those supplies you purchased for bake sales or the stamps you bought for sending out fundraising letters to potential donors. These seemingly small costs can add up over time. And don't forget about the mileage you rack up while driving for charity work. It's all deductible, helping you save money while supporting important causes. For the year 2023, the IRS allows you to deduct 14 cents per mile for every mile driven in service of a qualified charitable organization. This applies to all charitable driving, whether you're delivering meals, transporting clients, or running errands for the organization. It's crucial to keep receipts for all supplies purchased and maintain a simple log for tracking your mileage. Be sure to include the date, the name of the charity, the purpose of the trip, and the number of miles driven. You'll be surprised at how quickly these small expenses can add up and contribute to a significant deduction. So before filing your taxes each year, take a moment to review your activities. Did you volunteer your time, help organize events, or drive your car for a charitable cause? Take the time to add up all those costs and calculate your total mileage. Even seemingly insignificant expenses of $5 and $10 when combined can easily total $100 or more in deductions, leading to real tax savings. Don't overlook the little stuff. Every contribution counts because it can make a real difference in your tax liability and overall financial well-being. Remember to document everything meticulously. Claim every single dollar that you're rightfully entitled to deduct. Your generosity and commitment to charitable work can ultimately pay off when tax time rolls around. Here's a unique one: the student loan interest deduction for payments your parents make on your behalf. If the loan is in your name and you're not a dependent, you can deduct up to $2,500 in interest, even if your parents paid it directly. The IRS treats it as if they gifted you the money and you paid the loan. This is an above-the-line deduction, so you don't need to itemize. Make sure the loan is in your name, you're not a dependent, and your income qualifies. Get your Form 1098E from your loan servicer. If your parents helped with payments, don't miss this deduction. It's a rare IRS rule that works in your favor. Take advantage. Job hunting in your current field? Some expenses are deductible. Travel for interviews, resume services, printing, and employment agency fees can all count. But it must be for a job in your current occupation, not a career change or your first job. For W-2 employees, these deductions are suspended until 2026. But if you're self-employed or a freelancer, you can still deduct job search costs on your Schedule C, track travel, resume, and agency expenses. These can directly reduce your taxable self-employment income. The gig economy makes this deduction more relevant than ever. Keep records and claim what you're owed. Don't let job search costs go to waste. Did you know that you can actually deduct the miles you drive for medical care purposes? It's a tax benefit that many people overlook, but it can really add up over the course of a year, especially if you have frequent appointments or need to travel long distances to see specialists. Every single trip you make to the doctor counts towards this deduction. That includes visits to the dentist, of course. Dental health is medical health, and the IRS recognizes that. Trips to the pharmacy to pick up prescriptions, or visits to any kind of medical specialist, all count towards your deductible medical mileage. It's a broad category, designed to help offset the costs of seeking medical treatment. For the 2023 tax year, the standard medical mileage rate is 22 cents per mile, so for every mile you drive for qualifying medical purposes, you can deduct 22 cents from your taxable income. Interestingly, this rate is actually more generous than the standard charitable mileage rate. This highlights the importance the IRS places on ensuring people have access to medical care. At the end of the year, take the time to add up all of your medical-related trips. Go through your calendar, check your appointment reminders, and gather any records you have. When you start adding it all up, you might be surprised to find that your medical mileage easily totals hundreds of dollars in potential deductions. It's important to remember that the travel must be primarily for, and essential to, receiving medical care. This means the main reason for the trip should be to seek medical treatment. In addition to the mileage itself, you can also include any parking fees and tolls you incur during these medical trips. Be sure to keep your receipts for these expenses as well. To make things easier, it's a good idea to keep a simple mileage log throughout the year. In your log, be sure to record the date of the trip, the specific purpose of the trip, for example, doctor's appointment, physical therapy, and the total number of miles you drove. This medical mileage deduction is considered part of your overall medical expense deductions. Keep in mind that you can only deduct the amount of your total medical expenses that exceeds 7.5% of your adjusted gross income, or AGI. However, for those individuals and families who face significant healthcare costs throughout the year, claiming these medical mileage deductions can be just what you need to push you over that 7.5% threshold and unlock valuable tax savings. So, don't ignore those transportation costs associated with your medical care. They really can add up to a substantial amount. Make it a habit to track every single trip you take for medical purposes. Diligently tracking your mileage could unlock a significant tax deduction that you might have otherwise missed. When it comes to tax savings, every single mile really does matter. The home office deduction isn't just for full-time business owners. If you use part of your home exclusively and regularly for business, even a side hustle, you may qualify. Exclusive means the space is only for business. Regular means you use it consistently. Two calculation methods: the regular method, percentage of home expenses, or the simplified method, $5 per square foot, up to 300 SQ, FT. The simplified method is easy and paperwork-free. Don't be scared off by audit myths. If you qualify, take it. Keep records of your workspace and expenses. Even a small home office can mean big savings. Remote work and side gigs make this deduction more valuable than ever. Claim what you deserve. Teachers, don't forget the educator expense deduction. You can deduct up to $300 of unreimbursed classroom expenses, $600 if married to another eligible educator, qualifies for K-12 teachers, counselors, principals, and aides working at least 900 hours a year. Deduct books, supplies, software, and even professional development courses. Keep your receipts. Most teachers spend more than $300 anyway. It's an above-the-line deduction, so you don't need to itemize. Don't leave this money on the table. Claim your well-deserved savings. Did you serve on jury duty and turn over your court pay to your employer? You still have to report that jury pay as income, but you can deduct the same amount. This prevents you from being taxed on money you didn't keep. Report the income, then take an above-the-line deduction for the amount given to your employer. If you forget, you'll pay tax on money you never received. It's a simple but crucial step. Don't let this obscure rule cost you. Follow the two-step process: report, then deduct. Keep your tax bill fair. Did you pay for tax prep or software? If you're self-employed, a freelancer, or have rental income, you can deduct the business portion of those fees. For W-2 only filers, this deduction is suspended until 2026. Deduct the cost of preparing your Schedule C, E, or F as a business expense. Even a portion of tax software counts if it's for your business or rental activity. Keep records of what you paid and what it covered. For side hustlers and landlords, don't miss this easy deduction. It's a business expense. Claim it. The Savers Credit is a powerful tax credit for low and moderate income earners who contribute to retirement accounts. It's a credit, meaning it reduces your tax bill dollar for dollar. Contribute to an IRA or employer plan, and you could get a credit of up to $1,000, $2,000 for married couples. The lower your income, the higher the credit percentage. For 2023, singles under $36,500 and couples under $73,000 may qualify. Many young or part-time workers miss this. You must be 18 plus, not a student, and not a dependent. If you qualify, claim this. It's free money for saving for retirement. Don't leave this on the table. Build wealth and cut your tax bill. There you have it. 10 overlooked tax deductions and credits to put money back in your wallet. The tax code is full of opportunities if you know where to look. Download the free checklist below to review before you file. Need help? Fenton Tax Help is here. Schedule a free consultation at getmidxhelp.com. If you found value, like, subscribe, and share this video. Don't let your savings slip away. Thanks for watching. See you next time.